I think the big challenge is when a roaster says, okay, well, I'm going to hedge, and the accessibility that we've had to day trading in other, in other stocks and other commodities, it's widely accessible. It's on our mobiles for everyone now. Thinks, hang on, I'll buy in the market. But hedging in its sense is, if you're going to hedge, you're building another business. That's it. You need to have a liquidity to be able to go for the ups and downs of that business. You need to spend the time to understand it, to work on it, to do those things. Majority of the larger trading houses or importers or exporters, and even like more sophisticated producers and exporters, will have hedging, and they will actually have a side of their business that does that. And they do that on behalf of the contracts they're selling to you as a roaster, to be able to give you some consistency in your pricing, and then to be able to help them kind of position themselves against the market.
This episode is proudly brought to you by Mapper Forward's workshop. It's time to become a coffee consultant. Learn how to diversify your revenue streams and create freedom from your day job while saying goodbye to that alarm clock forever by becoming a consultant within the coffee industry or directly to consumers who have shifted towards home brewing and home roasting. Protect your income from challenging times in the coffee value chain by taking this course today. Go to mapperforward.coffee/workshops or click the link in the show notes for details. Welcome to the Daily Coffee Pro by Mapper Forward, friends. I'm your host, Lee Safar, and this is episode 3 of a fantastic 5-part series with Caleb from Greensquare. We are talking about the new normal in buying green coffee. And in this episode, we're going to be talking about budgeting for green coffee purchasing and how it's changed. So Caleb, how has it changed?
I feel like that's the hardest question to answer. If anyone, it's gone up. That's what it has. It's just gone
up.
Yeah, and this is where there's many things about this. Like, has it gone up and are producers earning more? There's lots of conversations that can be had in that direction. And the conversation that I think where my skill set lands, where my network and my community is that we've been working with is, as a roaster, it's gone up for us. So what does that mean? And how do we continue to purchase? And how do we continue to have successful, thriving businesses while purchasing at a higher price? And the challenge is, I've had some roasters saying, I'm playing the market, and I have a pretty strong opinion about what that means. And I think it's pretty important that a roaster has a little bit of awareness about, okay, this is challenging. Like, this is wild, but am I really playing the market, or am I just waiting and hoping? Because if I'm waiting and hoping, and as we've touched on in our other episodes, like, there isn't any backups anymore. The backups, there's not spot coffee available. Like, there's not overflow stuff for me to get access to. So if I'm waiting and hoping to meet a budget that I set back in 2016, because that's what I set it at, that's a really volatile and risky thing. So the biggest thing I can say is, like, prices are going up, prices are challenging. No one has a wand to tell you when the market's going to go down. Yes, there was traditionally fluctuations of, we'd get a Brazilian harvest report, we'd get central reports, we'd get some things like that would tell us things. These aren't consistent anymore. We're seeing more and more volatility, more and more speculators in the market, which make those seasonal things more challenging, and also the environmental impacts that then increase that speculation. So if you can work internally, you can control your costings, you can control your budget, build it, document it, structure it, and then that is your law to work to. That if it meets your budget, it doesn't matter if the market's at $2.40 USD per pound. Lock it in, meet your budget, and go. Because the time and the risk you put your company at by not doing that, because hopefully it'll go to $2.39 tomorrow, is way too volatile and risky. So it's having confidence and clarity in your costing, in your budgeting, and then also in your pricing off the back of that, being willing to actually find the right market fit for your product types as well.
So for those who are listening who didn't understand anything about what Caleb just said, no, and the reason I let you go there is because there are a lot of people who did understand what you said and they needed to hear it in that chunk. But for the people who don't understand, let's break down a couple of things that you said there.
For sure.
Okay, so tell people what it all is based off. Let's talk about the C market for a second. Tell people what it is. Go for it.
Yeah, so the C market is like a base commodity market which trades Arabica coffee and is like the global base benchmark of what coffee costs. For us and majority of people who will be buying specialty coffee, we're working with differentials and premiums that are applied on top of that. But if the base moves, ours move with it as well.
Right.
So it's a kind of a global benchmark to look at, which is traded on the New York Commodities Exchange, and something that is based on supply, demand, but then also speculators. So speculators can be thinking it's going to move in a direction and bidding in that direction or against it, which can affect the price.
And for those who are who are not familiar with the C market, if you're buying a contract on the C market today, you're not buying to receive the coffee today. You're buying to receive the coffee in a future determined date, right? Which is why it's called a futures market. Now, Caleb, can you understand what part of that is an important part of this piece and why it's gambling?
Oh, it's 100% gambling. But the biggest challenge is like it is gambling.
It is gambling.
It's day trading. And it's super volatile. And as an Australian man who follows lots of sports, I'm okay with gambling, but not in my business, and not for like I don't gamble in my business, and I don't ever recommend anyone gamble in their business.
Yeah.
When we start to hear people looking at it, it's one of those things that what can you control? You can control your budget and your costs, and you can interact. So the one thing that I find really interesting, we talked about education structures and identifying and understanding things, is really identifying some key terms that get used in purchasing coffee. So am I purchasing a forward contract? Am I purchasing a futures contract? And I've heard this word get interchanged or incorrectly used in different scenarios. So it's important to understand, as a coffee roaster, you will most likely be buying forward contracts from an exporter, producer, or supplier, which is for a physical product, which you will quality assess and evaluate. You will lock in a price, and then you will draw and receive that coffee. The future contract is when you're actually buying a futures, like was kind of mentioned then, is like on a market where you're hedging against kind of volatility in a market. So it's really good to understand that they are very different. And for a lot of roasters, buying forward contracts is crucial to your core supply now.
Mm-hmm.
But it's important to understand that it isn't a future contract. It isn't a speculative contract. It is a forward contract for physical product.
Right. And folks, when you buy a contract on the C market, you don't get to cup that coffee. You don't get to know anything about that coffee. There's a few minor details, but that's it's commercial coffee, and what you get is what you get. Now, the thing is that we are entering a period where people know a little bit more this year than they did a few years ago, and the price volatility of this C market, they hear this one term that we're going to introduce to the conversation, and they think, well, this is the way that I'm going to make my business safe, and they do what's called hedging. So why don't you've been covering this in your we talk about it on the podcast, but you've covered it really well on your Instagram reels. So why don't we talk about when it comes, because this is a part of like the budgeting that people are doing. They're going to hedge against what's going on with price volatility. Tell people what hedging is and why it's really gambling if you don't know what you're doing.
Yeah, so hedging, and once again, like, I am not a commodity trader. That is not my expertise.
And this is not financial advice, folks, just to be clear.
100%. So it's important to know that. But I think the big challenge is when a roaster says, okay, well, I'm going to hedge, and the accessibility that we've had to day trading in other stocks and other commodities, it's widely accessible. It's on our mobiles for everyone now. Thinks, hang on, I'll buy in the market. But hedging in its sense is, if you're going to hedge, you're building another business. That's it. You need to have a liquidity to be able to go for the ups and downs of that business. You need to spend the time to understand it, to work on it, to do those things. Majority of the larger trading houses or importers or exporters, and even like more sophisticated producers and exporters, will have hedging, and they will actually have a side of their business that does that. And they do that on behalf of the contracts they're selling to you as a roaster, to be able to give you some consistency in your pricing, and then to be able to help them kind of position themselves against the market. For the average coffee roaster, no matter where you are in the world, to hedge, in my opinion, is way too risky. That's you trying to buy a futures contract on the market at a difference of what you've actually purchased physical. So buying a physical forward contract and then linking it to a future and trying to play the system that will make it out to be better. And if you get that slightly wrong, you could end up paying multiples on the price of your physical. So they are challenging. If you have suppliers who do hedge for you, that's the safest way that I've ever seen a roaster, or a majority of roasters have access, is communicating to their suppliers, and their suppliers can say, hey, we can hedge this for you, would do this, this, and this. And they will communicate that really clearly, because they're commodity traders. That is their expertise to do that. And they'll communicate the risk and the pros and the cons and how to do that. But it's not the same as day trading. It's not the same as going to buy a couple shares in the S&P 500 and being like, cool, I'm good to go. It's extremely different.
At all. And folks, a couple things here. If you're interested in learning about or getting involved in hedging, there's only two people that I would recommend that you get in contact with, and that is Decali Trading. We don't get anything from making these recommendations. It's just that I trust these two people more than I trust anybody to look after the coffee industry. So the first one is Decali Trading. Carly Garner has been on this podcast before. She has a deep love for people who grow coffee and people who run small businesses. The other is Judy Gaines. Judy is going to be on the podcast in a couple of weeks. And we're going to talk about a lot of the volatility that's going on. But these are the two people that I would trust to send you to, and for you to get in contact with them and say, Lee told me I need to talk to you about hedging and what I can do to protect myself from all the volatility that's going on. And they will tell you whether it's right for you or not. And the reason that it's so important to find people who you can trust is because they will tell you if this is not right for you. It is highly risky. It requires you to have a whole bunch of extra money separate to what you're doing in your business so that you can feed this thing in case things go a little bit in the wrong direction. There's things called margin calls and all this kind of stuff that you need to be aware of, and it can put you in deep shit if you don't know what you're doing. So I would also recommend work with people like Felipe from Faf Coffees, who was on the podcast last week. At the time that we're recording, the time that this is airing, this will have been on the podcast last week. But Felipe is an exporter, but also a coffee producer who is getting into hedging on behalf of the people that he works with. So he is taking on the task of understanding what all of this is so that he can leave you to do what you do, and he will do what he does. And as Caleb was saying, like, it's so important to let this stuff be, unless you're looking at building a whole other part of your business. This is not for small business owners. And again, this is not financial advice. It's just that this is so hard to understand and so hard to do well, but super easy to fuck up and lose everything that you possibly have if it goes the wrong way. And all it needs is speculators that are in the market that are going to push it in a direction that you don't want. So tell people about speculators. They're a really important part of this puzzle.
Yeah, well, like as I mentioned, I can only speak to this to a certain level, but a speculator is not an industry operator or an industry person who's hedging their own contracts. It's someone who literally makes their money from bidding and kind of shorting different markets to try and push them in certain directions to make a profit. So they have no attachment. They have no longevity for our industry, for our supply chain.
They're not in the coffee industry at all.
In a supply chain. Exactly. So they have no emotional business or relationship attachments to our supply chain that we have when we're hedging our physical product, or when our suppliers are hedging our physical products or purchasing our products. So those operators are complete.
They're disconnected.
They're just disconnected.
They're in it to win. That's it.
Exactly. So it's from a pure financial reason that they play in the market, the speculators, and that is just something to be aware of, that it's a completely uncontrollable variable that you have to be willing. And that's why we mentioned that you need that extra set of funds. And if you have all that funds to go, yeah, I'm going to make a trading arm of my business, use it for your business. Use it for something else in your business.
Secure the coffee that you need so that you don't go out of business.
Book the contracts, like get shorter trading terms, and you can get better finance rates on your coffee. Like, use that liquidity that you have in other ways to save your bottom line. So another thing that I think we're kind of maybe jumping off a little bit about, another thing I think is really important, as I mentioned, my expertise and our software is only available in Australia at the moment.
Mm-hmm.
So we have a lot of experience with Australian coffee roasters and Australian kind of challenges particularly. But for the market being traded in USD per pound, for the Australian person purchasing or green buyer or roaster, we're looking at USD per pound. But we're buying and selling majority of the time in AUD per kilo, which is pretty drastic. So it's important to be looking at it in your currency and in your weight metric of how you consume it.
That's a whole other thing.
Yeah, you can do a little like Excel spreadsheet calculator. Like we built live converters so you can just see the feed and toggle between it. But the idea is it's understanding what that is for you and what that really means. So like, okay, I think majority of Australian roasters today could probably tell you what it is in AUD, in USD per pound, but they couldn't tell you what it is in AUD per kilo. So like we've been sitting for the last month above $8 AUD per kilo for a coffee. And that's the base commodity price, where traditionally, not even 4 years ago, maybe 4 years ago, I could buy a good quality base Brazilian blender for that price. I cannot do that now. That is $12, $13 minimum to be getting those coffees now. And it's important to understand what that means, because sometimes USD per pound is just a figure that hovers around. You go, yeah, cool. Okay, it's gone down by this much, but what does that actually mean to you as a roaster, and your currency in your metrics is important to be looked.
It's all a part of the story, right? Like your business is you painting a story. So you understanding what your value proposition is as a product. Am I selling specialty? Am I selling commercial? Do I care about what people are drinking? Do I not care? Do I just want to sell them a fucking coffee? Right? That's the base of the storyline. And then you understanding how you're going to tell that story to your customer. Does it involve the producer? Doesn't it involve the producer? And then taking that to the next level and figuring out, well, okay, the story is in Australian dollars. The story is in a $5 flat white. If you're trying to tell the story in a $5 flat white, but you're talking in USD, you really have some distance between the two different sides of your business. So it's such a beautiful point that you made there about like interpret what's going on in the market into the story that you're trying to tell so that you can have more of a connection with it. And then you can make better decisions because you've got better insight into what you're doing. Right.
I think like a powerful statistic for us that we've been communicating and we're communicating with our Australian community at the moment is the 12-month comparison of the market in AUD per kilo. We're sitting at just over 34% increase from, I think we worked it out yesterday's date, but roughly early July to last year to early July this year is 34% the market has.
On the
so
C
if we're
market.
having a conversation, yeah, and that's converted to AUD per kilo. We've taken the conversion rates on dates and things like that. So it's all kind of tailored to that exact market. And that's a really powerful communication to have to someone, because at the moment, a roaster's trying to justify to their wholesale clients to put a price up. A roaster's trying to justify if they have a cafe to put their price up there. They're putting their prices up by much less than 34%. So they're bearing a lot of this cost that they're having to incur at the moment. And they're not armed with that communication to know that or to be tracking that. So it's crucial to use these things as exactly like you mentioned, Lee. Like you've got to have these kind of tools in your toolkit to empower how you communicate about your business and about your margins.
Yeah.
And it's not romantic, but it is fundamental to understand those things and have that conversation. Because if your price is increasing by 5% and the market has increased by 35%, that's a really powerful way that you're adding value to your customers to say, hey guys, we're still purchasing this so we can keep purchasing the same quality of coffee. We're going to have to do this. Market's moved here. We're going to do this. We're meeting you in the middle. Let's keep going. Let's keep supporting our producers. Let's keep supporting the quality of coffee. And using data to create those communications and elevate those sales communications, those relationship communications, and actually having it backed by visible data that makes sense and can be really understood by both sides.
And a really sobering picture that I like to paint for my clients as a like a business advisor is, folks, when you hear statistics like that it's almost 35% year on year, if you decide not to keep up with that increase, all you're doing is shortening the runway from today to the end of your business. There's no other way of looking at it than that. If you're not keeping up, particularly with the situation as it is today and the amount of volatility that there is in the market, if you're not deciding to increase your prices so that you can participate in the longevity of this entire supply chain, all you're doing is saying, I'm going to be the hero, I'm going to take the hit, I'm going to help the customers survive this for a little bit longer. And it shortens the runway of how long your business will survive if you don't have any other strategies to survive. And this is where people are like, well, I'll just hedge. I'll hedge, and that way I don't have to increase my prices. That is a terrible strategy. Again, that's not financial advice, but it is such a risk. Just raise your fucking prices.
Yeah, and it's hard. Like I understand it's not easy to raise your price overnight. Not every roaster can go, boom, we're going to increase
have a
30% or whatever. Exactly, and it's one of those things about, like you mentioned, it's shortening your runway, but it's also like not communicating it, regardless of where your price sits at the moment. Not communicating it is devaluing the work that you're doing and the risk that you're taking on behalf of every person you sell coffee to. So it's communication.
Too.
Yeah, totally unnecessary. It is a challenge in that sense of like how to budget, how to do those things. It's like we mentioned the figures there. It was referenced off the top of my head. It was around $1.60 USD this time last year. We're sitting at almost $2.50 USD right now. But all the pricing models, particularly in Australia, are outdated. Like I want everyone to look at themselves right now. Like when was the last time we updated our pricing models? And it's not frequently enough. We're using pricing models and costing structures that were based on 120 USD per pound. So 160 is a challenge, let alone 250. It's time to invest, not in hedging, not in futures. It's time to invest in building those foundational structures and costing structures and pricing models to build a road forward for yourselves. And that's not 30% overnight. That's okay, what is my cost? What is my pricing? And how do I build a sustainable journey to be able to trade it above $2 USD per pound?
Amazing. In the next episode, folks, we're going to talk about the shift in inventory and supply chain management. And there's a lot to be said about that at the moment. So join us. For sure there's going to be some geopolitics that we're going to discuss in this. So join us in the next episode. Peace, love, and peanut butter. Have an amazing rest of your day. I really hope you enjoyed this episode, friends. Please don't forget to show us some love by subscribing, liking, commenting, and most of all, sharing this podcast with your friends. Check the show notes for links, including our sponsors and our Patreon. And stay tuned for more great conversations on the Daily Coffee Pro by Map It Forward.